President Cyril Ramaphosa has put the blame on banks for the poor uptake in the 200 billion rand loan guarantee scheme. The money is meant to help small companies hit by the economic collapse due to the COVID-19 lockdown. The scheme forms part of Ramaphosa's 500 billion rand stimulus package unveiled last April. Well, to discuss this further, we're joined by the Banking Association of South Africa's Managing Director, Bongiwe Kunene. Ms. Kunene, good evening, and thank you so much for your time. Firstly, let's just begin here. Was there ever 200 billion rand that had been borrowed, at least by the banks, from the Reserve Bank in order to assist those who would want to access this loan guarantee scheme?
There was an announcement of 200 billion rand. In effect, the banks negotiated with the Reserve Bank, and the amount that they negotiated was 67 billion.
So to start off with, the 200 billion rand was never really in the accounts of the banks effectively.
No.
Is that part of the reason why the banks were so stringent when it came to giving out money to those who were in desperate need of it, especially small businesses here?
Not really. I think there are a number of factors that we have to consider if your question is about how did the money flow. Knowing the amount was 67 billion and what has been disbursed up to now is 18.16 billion, we think that the scheme has performed very well. The issues we are contending with is the need to make sure that we maintain very good lending practices. We do not have a history as South African banks of reckless lending, and it didn't start with the assistance that the banks were giving to our customers last year because of COVID.
18 billion is a far cry from 200 billion rand, and in the imagination of South Africans, of course, the assumption or the impression that was created was that this 200 billion rand, the point behind it was to assist as many people as possible.
That was the point. Assist as many qualifying businesses as possible. And that was done. There were measures that were relaxed to allow the businesses to qualify. Some of those were quite simple, like if the client was known to the bank, even if they didn't have audited statements, but they had management accounts, they were able to access the loan platform from the 9 qualifying banks.
One of the things that we saw, in particular for small businesses, is that when they were applying, at least this is the feedback that small businesses gave in terms of their own interactions with the banks and trying to access the scheme, is that the banks were using the very same criteria that they often use when giving them loans under ordinary conditions. So the very same reasons that have been and that have resulted in small businesses sometimes being excluded from being able to access financing from banks, that very same criteria was still in place. So that means that from the get-go, it was never going to reach a certain group of businesses within the economy.
I think your statement needs to be unpacked in different ways. A lot of businesses in 2019 were already in difficulties. The scheme comes into effect in May. It is supposed to address businesses whose difficulty can be directly attributed to COVID-19. Now, knowing that these businesses may have had problems in 2019 really points to a deeper problem in our economy. That problem being an economy that has not been growing for the past decade, and the operating conditions for businesses are being quite difficult in different sectors. And of course, the risk appetite from the banks is determined by what they know in terms of the sectors that they are lending to. In terms of the qualification or the risk assessment criteria that the banks were using, that was the understanding that was between the National Treasury and the Reserve Bank, that make sure that you do not lend excessively in the sense of risking the financial position of the country. Make sure that you still apply your criteria the way that you've always done, and conduct business. What is new in this case is conducting business even in times where you may not have extended credit, because you now have an agreement that the banks are going to take the first loss, but there will be a guarantee at the end of 5 years when you audit the work that has been done in terms of the COVID qualifying businesses.
Do you think that this needed to be explicit from the get-go? Because the reality is that there was a false expectation that was created.
It was explicit. So maybe there is a need to have communicated more, but it was very much explicit. Those were the conditions.
You recently announced an extension of the loan guarantee scheme. Is there any value in extending it? Because the reality is that those who, at least the majority of them, who have been, denied access, they've known for some time. So what's the point of the extension?
Well, there are still businesses that qualify, and they have been given an opportunity to access the scheme. There is also the need to smooth out the ending of the scheme, because some of the businesses have been assessed but have not drawn down the credit that they have applied for in full. So this will give them the opportunity to draw down on that credit. And lastly, when you extend by these 3 months, you allow all the banks to really do as much as possible for those qualifying businesses in this time period.
What happens to those people that didn't qualify? And just on the balance, do we have actual figures of how many businesses tried to access this funding? How many were approved from those applications? And what happens to the people that were seen as not qualifying for the scheme?
We do know that close to 51,000 businesses have applied to the scheme. We have been publishing the figures and the reasons for those who were rejected and for those who have been declined. What happens to those businesses that didn't get into the government-supported scheme? They can still apply for the normal banking products in all the banks in South Africa.
But these are the very products that they didn't qualify for before. So I guess the bigger question is, how responsive has the Banking Association of South Africa been to the feedback that it's getting from entrepreneurs and from those who are running small businesses about where the gaps lie in terms of sustaining their own businesses and how they can be better supported?
So the real issue that we have established in our feedback is the appetite for borrowing from the entrepreneurs and the businesses that were targeted by the scheme was quite low. And the reason for that being the scheme is a debt. It's a debt instrument. The way in which it works as a credit enhancement facility. What the businesses may have preferred is equity injection into their businesses or any form of funding that has different terms from the debt solution. Because what seems to be very apparent is that the appetite for acquiring more debt when the economic situation in the country is quite uncertain in terms of businesses being able to repay and also being able to have sustainable cash flows. That is what was uncertain. Therefore, if there could have been sources for these businesses to be assisted either on grant terms or on different lending terms, not those from banks, they could have accessed the scheme if it was constructed like that. But what we have right now is one thing. It's a debt instrument.
Bongiwe Kunene is with the Banking Association of South Africa.